Hi, good morning, everyone. Testing 1, 2, 3.
Yes, we can hear you. Good morning, Nazri.
Loud
morning,
and clear, Novie. How are you?
Good, Alhamdulillah.
Good
You look
morning,
healthy.
gentlemen.
Hi, Pauline. Good morning to you.
I can see some familiar names in the list.
Yes,
Dr.
yes.
Nur Marini, thank you for joining. Shazana Lokman, thank you for coming and joining me today. Jeremy, thank you for joining.
And the list goes on, yeah?
Yeah.
Basically, all your friends and acquaintances and contacts from MICPA, is it?
Out of MICPA also. Yeah, Doctor, thanks.
Thank you for inviting me.
Most welcome.
Okay. Let me just get the show going in a bit, but do allow me to introduce myself. My name is Nazri. I'm the founder of MyFinB group. And along with me, I have several distinguished individuals. Of course, you've seen Novie Tajuddin. He's the CEO of MICPA, and he's a great advocate for accountancy education and has been in the webinars, quite a bit, inspiring and encouraging the accounting sector on the mindset, on the skill set, and what prepares them for the future. And of course, his background is very much enriched in education areas. If you Google him out, you can see many things that he did for the Malaysian education. So his perspectives in this session certainly provides a very important perspective for us, yeah. And along with him, we have Miss Tan Po Ling, the only lady, the only rose amongst the thorns. She's basically also an accountant, just like Novie and Paul. She is very much embedded into the M&A advisory, and she's one of those traditional accountants who have turned very modern and very forward-looking, expanding beyond the region, expanding beyond the shores, as well as going horizontal as well as vertical at the same time. It's a good example of how an accounting firm like her is evolving, right? And last certainly but not least, we have Paul Chan. Now he's a big advocate for value creation, for harmonizing board's roles with auditors' roles. He believes in how accountants should transform themselves very quickly, sooner than later. If not, we'll die. If you don't evolve, we'll die. That's his basic message most of the time when you hear him talk. Very strong advocacy for accounting transformation. So we have quite interesting and a distinguished panel of members who certainly will offer thought-provoking insights into what you call, a very strategic role of accountants. And basically, we have three dimensions into this discussion, wherein there is the what you call the dimension of time, people, and money. Okay, but before that, let me just give an overall synopsis. Okay, is data the new gold? Right? Data collected in isolation has no value. So like gold, it needs to be manipulated and analyzed to get most of it. Therefore, like gold, data is treated as a commodity. And it is the insight that we mined from this valuable resource that is the currency that gives you and the accounting firm the means to drive growth. Now, everybody loves gold, right? It's shiny, perceived to have a value and status because of its rarity aspect, right? But data may not at the onset have the same allure, right? Unlike gold, data is everywhere and doesn't have the same mass appeal. But is it worth just as much, right? So this is the question that we're going to ask ourselves and ask from the panel members. Right? To obtain value from gold, it needs to be minted into coins, turned into jewelry, increasingly used in technology thanks to its conductivity. This productization creates a valuable entity that drives that business profit, right? So data collected in isolation has no value, like gold, right? It needs to be processed, manipulated, analyzed to get most of it. So gold, like data, right, is a commodity. Like gold, data is a commodity, and it is insight that we mine from this resource that is the currency that gives you and the company the means to drive growth. So simply put, while it is critically important to collect data, like the way we mine gold, right, the real impact comes from analyzing the data that you collect and hold in your vault. So for this session, it's very important that before we jump into data, into gold, right, we gather the strategic insights from our distinguished panel of speakers. First, to look at three dimensions that we believe are the key considerations to make accountants and data become gold. So the three dimensions, as I mentioned earlier, relate to the dimension of time, people, and money. So without much further ado, Okay, the discussion that that it will ensue will be very dynamic and will be very spontaneous. So it's not going to be so structured as in one person has X minutes and then they'll start talking, you know, and explaining. So I know there's been many topics and discussions on this aspect about how accountants must do this, must do that, right? So we're going to approach it differently. So we'll start off by putting the first topic for discussion, right? We're talking about the, can I have the next slide, please? So is Paul inside there? Hello? All right. Okay.
Hi, very sorry. I get a connection problem.
No worries, no worries. Welcome back, Paul. I've introduced you
Okay.
proper.
I've been trying for the last 5 minutes.
No worries. Because we excited to get most of the panel members insight. We want to get the ball rolling. And the first topic for discussion is how do you maintain the correct balance, right? Where we expect the accountants to become very compliant reporting type of role versus expecting the accountant to pursue a more strategic role in terms of analytics, in terms of decision making, supporting the board, right? Supporting the CEO, beyond more than just a gatekeeper of information or stewardship. So where is that a common point that you see where compliance and strategy gives that value creation? How do you maintain that balance? This is a $1 million question that defines how accountants should move forward. So perhaps I'll start off with Novie. What are your thoughts to it?
All right, thank you. Thank you, MyFinB and Nazri. Welcome, my fellow panelists, Paul Chan and Pauling. And I just want to add a bit. Pauling is a MICPA member as well. So,
thank you. Very loyal member here.
All right. Okay. I think to find the correct balance, like you said, it is a is a $1 million question, Nazri. It is accountants has always been trained to be compliant, and in past many years. But I think I always talk about accountants need to be evolved in terms of not just they are just on the compliance side, but it is now moving towards strategy. Why it is strategy? Because it's more forward-looking rather than historical. In the past, accountants has been, I think in the book in the past we learned a lot about historical accounting. It's all about historical. It's all about the numbers that being captured in the past. But now it's different because we need to be more comparative. So we need to have forward-looking. In terms of forward-looking, we need to strategize. I think that's where the both sides are actually important, but we need to balance it. We need to really balance it because that's where you put the middle there, you got the value creation. The value will be created based on the historical input and also the information that you need to put forward for the future. I think I stopped there.
If I were to interject you at this point, Novie, thank you so much for that. How about the thoughts that from some accountants who feel that taking a forward-looking approach gives more exposure to their risks because the future is full of uncertainties now. And you ask them to take a forward-looking thing and they make mistakes, they trip, and then they have to face, ironically, the compliance cost rather than performing a compliance role. Okay. So how do you address this part, Novie, before we pass on to Pauling and Paul, okay, or chip in anytime, yeah?
Yeah, sure. I think by looking forward, and forward-looking is actually, we are mitigating the risk of making mistakes because we are actually more prepared and we anticipate things to happen rather than, we are waiting. What happens if we don't really anticipate for business? What's going to happen in future? So that's why there are a lot of tools in management. We also learn about scenario planning, things that's going to happen, what if analysis. I think all these are the things that we need to put into consideration to mitigate the risk of the future uncertainties. Then only the accountants will be more prepared with many scenarios and business modeling. I think
so what you're saying, Novie, is that better to have a forward-looking perspective into risk rather than not taking any views in the future that will expose you to lesser risk as opposed to more risk if you were to do it, right?
Correct.
What do you think of this, Paul, your views?
I think the reality in the marketplace is this. We are always exposed to risk. in fact, by definition, doing business is actually, to me, is managing capital risk. You put money into the business, you put money, capital into your investment, you are exposing to the risk for a better return. Better than, for example, a safe investment like fixed deposit or some of the fixed income type of investment, right? So there is always an element of risk. So I think that we ought to look at it in a very rational manner, a very pragmatic manner. If there's any, I mean, we always take risk, but we take calculated risk, okay? Now, coming to the point of the compliance and strategy, there are two roles here that are actually the mirror image of each other. You may say, you know, it is a two faces of the same coin. The compliance side are the regulatory authorities' responsibilities. Why are they putting compliance there? It's because they want to safeguard the investing public for the money they put into the company, especially public companies, all right? Private companies are the same too, although it's not as highly rigidly, highly regulated as a publicly listed company. So the regulators have put a framework around there because people put money in your company, they have no say, nothing at all in terms of the influence on the management of how the company is run, other than to comply with the framework which the regulators have put in. So they play a very, very significant role. If they do not have this kind of robust framework of compliance, the public will lose confidence and do not put the money there, all right? And therefore, our capital market will suffer too. Now, having said that, on the other hand, on the strategy side is where the entrepreneurs make the money, all right? Is where the entrepreneurs see opportunity and take advantage in a way and capitalize on those opportunities in areas, especially horizon, that most people are still not clear about. Entrepreneurs being a very creative community, they can foresee something that is coming. Also, there's risk, yes, but the chances of making a good reward is there, and that's what motivates the entrepreneurs to move forward. So the strategic part on the marketplace is so very important. Now, these two got a balance, all right? On one hand, we want to safeguard investing public. On the other hand, we have to create value, which is what the role of the strategic thinkers in the companies do, right? If one side overbearing on the other side, you'll find that we are in a way inhibited to move forward to the best that we could. Take, for example, a regulatory framework is too prohibitive, or sometimes it's too restrictive. It stifles the creativity of investors, stifles the creativity of the entrepreneurs. On the other hand, if the entrepreneurs are so gung-ho, everything goes, you will lose the public confidence. So this part of it is very, very delicate balance. And in the process, you create tremendous value if this balance is struck in the most balanced way, so to say. Okay? So where's the correct balance? Actually, there is no quantitative measurement of that correct balance, but really, it is a delicate balance. It's just like, you know, balancing the best value of both sides.
Now, you brought up a very important factor, which is the government playing somewhat like a safety net in protecting the stakeholders, right? Based on the functions that the accountants do and all that. So how sufficient is this so-called safety net or, watchdog role played by the authorities at the moment? Taking into account the COVID and the VUCA effects that we're seeing now, how do you feel about the level of compliance meted out by the authorities, regulators, that would then impede them from being strategic in thinking? So I would like to touch base on the green aspects of it before passing to polling. Just want to hear a little bit from Novie and Paul about this before I ask polling on the orange circle on the strategic side. So Novie, on this part, do you think that there are sufficient or excessive level of regulations being imposed upon the accountants to think more strategic, or you think there is sufficient, or there's room for improvement? What are your thoughts to it?
All right, I think the regulation side of the accountants, actually, if we compare in the past and now, there are a lot more things that need to be complied by accountants today. I would say if you ask around all the accountants, the standards of accounting and how to regulate the members and so forth is more stringent compared in the past. So I would say it is sufficient compared to in the past, because in the past it's much more loose in a way, because there are not much a lot of say example, you take accounting standards, right? If you take the accounting standards, the treatment of the accounts in the book, it is more stringent in terms of certain things rather than in the past. There is more general, quite a standard approach. Now it is like slice and dice and look at how the treatment of the accounts to ensure that the accounts is giving the right true and fair view for the auditors to check and so forth. So in my opinion, it is sufficient in terms of how it's been regulated. Yeah.
So Paul, thank you so much for that, Novie. Paul, do you think that the level of regulation we impose on accountants right now are impeding their strategic thinking, or are they saddled with those increased or incremental level of reporting that particularly impedes the way to think strategically forward? I mean, don't mean to put you in a hot seat, but I thought we want to have a hard talk on the reality of what's happening right now.
I think we should. I think forums like we're very good. In fact, anything that come out of this COVID-19 in a corporate or professional sector is that those of us who are involved with it can express our thought process very clearly without inhibition. Of course, we're not going to incline to the political element of it, but purely on the business pragmatism part of it, right? As I mentioned earlier, that the role of regulators and the role of the market players are the same. We are on the different side of the same coin. Both of us want to create value in what we do. All right, as I said, the regulators have to create value to give confidence in the investing public that they, the investment that they put, the money they put into the company, are well safeguarded with a very robust framework, right, to ensure that the corporate sector will not abuse it. On the other hand, the corporate sector that runs the business, the core reason they're running the business is, of course, increase the value creation opportunity for the stakeholders. In this case, the shareholders, and not only the shareholders in terms of financial, but also other stakeholders in terms of the customers, in terms of the supply chain, in terms of regulators, in terms of environment, and many other areas as well. You know, as now we go into broader aspect of financial reporting, we talk about the ESG, you know, the environmental, the social and governance area, and the United Nations, they come up with the 17 SDG, or the social development goals, which they expect companies around the world to implement by year 2030. And so all these things are part of the regulatory framework, both locally, regionally, as well as globally. But at the same time, if the company does not make money, all right, you cannot protect the shareholder either, right? So therefore, the two-party regulators and the corporate side ought to play a very significant balancing role. And I will look at it this way: because we are partners in creating value, at the same time in creating stability, financial stability, both parties ought to have more regular, open dialogue on these sort of areas. Regulators, I give a lot of credit to them for crafting out good regulations to safeguard and to give confidence in the marketplace. But at times, if they do not fully understand how the market works, there will be an encroaching into the creativity and entrepreneurship of the marketplace. And the marketplace, put it this way, when we are stifled with restrictions, but in fact, I would say, have been restricted by fear, all right? If you do something wrong, you get penalized, you go to jail and all these things, which is necessary, but that will stifle the creativity. Let me give you examples of how that this sort of balance at times, if we don't see it, we may lose out. And now we are operating minimally in the regional market, ASEAN, if not Asia Pacific, if not a global market. Our competition is like that, okay? So if our regulatory framework is too restrictive, entrepreneurs move to other markets. A clear example I was quote was a homegrown company called Grab, started in 2011. All right, they launched in 2012. Where are they today? It's a Malaysian homegrown, but they are already based in Singapore, right? I always compare that if Grab would have IPO in Malaysia, they probably be the fourth or the third largest market capitalization company in Malaysia. Now, this is a value that we can capture back into our country if we have got a very good balanced view between the regulators and the market players. Because market players today is very, very mobile. All right, the market is global. And now what we're talking about in Zoom today, right? I can tell you that Zoom has crossed over every boundary. Zoom today's value is even higher than the 7th largest airlines company in the world today, the market cap of Zoom. And what do they have? They have this platform only, right? And if you don't understand the market shifting in terms of adopting new technology, we will always be losing out. Okay, and Malaysia, I'm glad that we have taken this initiative in boosting the number of data scientists and the data analytics in line with the, quite in line with the World Economic Forum prediction of the workforce of the future. By year 2022, this is when I'm going to come back to our accounting profession, being an accountant myself, how the World Economic Forum have projected the role of accountants or otherwise the relevance of accountants in the next 2 years. We will come to that later. Just to give you a balance, why it's so important that the regulatory authority and the market player ought to have more frequent dialogue to come to a balanced approach towards value creation and wealth creation for the economy.
Yeah, thanks, Paul. I like the fact that you brought up a part about looking beyond historical and numbers, which alluded to what Novie said earlier. So you cannot just look at companies as it is, right? You have to have a more strategic viewpoint on a company based on the companies you serve, and don't look just at historical, just don't look at numbers, because there's something called integrated reporting that looks at non-financial aspects. So very good so far. Thank you so much for your inputs here, Novie and Paul. Now let's shift the discussion onto the orange circle that talks about the strategy. So I would like to bring in Ling now, because out of the thousands of accountants, she is one of those few rare firms that pursue a very calculated risk approach in how she expands her business vertically and horizontally. We've learned a lot in terms of how she expands offshore as well as within the functions of the strategic finance. So let me ask Ling her perspective on how she balances the green and the orange circle as part of the TIA Group's expansion plans. Right? She's always been very modest. Every time I ask her to share her achievement or milestone, she would say, no lah, we just started, we're just planning, nothing achieved yet. But suddenly she starts acquiring, Cambodian accounting firms. She starts pursuing many, IPO related initiatives. So something that is not common amongst the PCAOB as well as accounting firms in Malaysia. So over to you, Ling. How do you balance the thing that Paul mentioned? How do you balance between compliance and strategy, okay, in the context of running your firm from your first party experience?
Thank you for such a great introduction about my firm and myself. I am also like one of those accountants. We are, maybe because of the education we have, we are extremely conservative, and mind you, we are the last to change. But recently, you can see that we have been very regulated in terms of the audit practice and all that. So our compliance cost is very high. We got to put in the right human capital to manage our firm. We got to put in the right tools, right technology, and all this involves money. Okay. And we have to manage our professional risk, which we have to balance out what is the cost of compliance and what are the benefits we can get out of being 100% compliance and all that. So it's very important we develop a strategy. Like our firm, we know we are in the SME market space, right? And SME, they are entrepreneurs, and they are not willing to spend a lot of money in terms of audit and all that. So how do we value create for all our clients? So that's why I have moved out of just being a typical auditor. We provide consulting services to our client. We add value to our client through, let's say if they need funding, they need investors, that's where we bring in and create those value for them. These are the things that the client look beyond of just statutory compliance, you see. Of course, we also have to develop a right strategy. And when we talk about strategy, it's very important that we must have a short-term strategy, a mid-term, and also a long-term strategy. Because whatever seed you plant today you will reap the rewards years later. So that's why, like our firm, we have embarked on many creative ways of how do we manage the documents? Do we put it on cloud? Or do we use AI to see the trend where our clients are moving towards? What are the business intelligence the client wanted to embark? For example, 10 years ago, I've already started exploring cloud accounting, which at that time, many of the people say, oh, what for? It's, you know, our internet is not stable, data security is a main concern and all that. And some of my clients today come back to me and say, oh, I regretted not following your footstep. In fact, we should have embarked on, you know, getting this cloud accounting on board so that we can move on with the business, especially during this MCO time. A lot of time they can't, send documents to us. They can't move on with the audit because they want to submit the accounts for funding, for loan and all that. Now they know why is it so important that we must embark on technology to move forward, you know, and e-commerce and all that. Because the businessmen in Malaysia, they are extremely conservative as well. They would not want to change the way they operate. They just so comfort zone in doing what they are doing day in, day out. So this is where I add value to my client by introducing digitalization of their processes and so on. So that, you know, this is some of those value creation that I can give to my client. And of course, we have to balance up our professional risk. How do we manage that? Do we do it via our firm or do we do it through our associates and so on? I think being an accountant, we have to be very cautious, not only for the cost, the time, and the money, right? Being an SME myself, I'm also looking at ways how we can improve our operations with the lowest cost. Embark on the technology. A lot of people will think it will be very expensive to embark on technology, but it's not true. We have to start a small step at a time. So that's why I have also gone out of my comfort zone to go to other areas, like other countries in Cambodia and other things. In fact, I'm also solving the industry problem that we have, like shortage of people coming out to workforce, they are not well trained, you know, they are very theoretical. So I have worked with some education institutions to give them learning, to fast track the learning so that when they come up to the firm like us, you know, they know what are the commercial documents look like. They know what are the accounting software, what are the tax computation, for example, what is the basic audit steps, why is it important to do an audit? I believe the more compliance we have, there is also a lot of opportunities out there for fellow practitioners to embark on, you know. So that's my thoughts about this strategy thing, and that's where we create value to our client. Yeah. What else? Correct balance. How do we balance the compliance costs and all that? There's no hard and fast rule. Sometimes we have to do it and then experience it, and we can correct it along the way, right? So I think that's my thoughts about this.
Thank you so
Over to you.
Thank you so much, Ling, for sharing insights about your company, the experience and the foresight that you had before cloud was even popular. And now that COVID, the MCO came in, right, you are basically digitally ready to serve your clients remotely and digitally. So the element of foresight again ties back to what we talked earlier about having forward-looking and futuristic perspectives about our operations, our business, and our sector. While we're taking on questions from the audience, let me move on to the next slide because it will have some relations to your questions. So rest assured, keep those questions flowing in and we will surely address them, yeah? The next discussion that we have now is the 3 R's for accountants, yeah? We call it the roles, the risk, and the reskilling aspect 10 years ago, present state, and 10 years later, right? So how would you describe the state of accountants today versus 10 years ago? And how do you see the profile of accountants 10 years from now? I mean, Ling has shared how she has foreseen or prepared herself for herself for the unforeseeable factor or situation like COVID, right? And many other opportunities that come in. So how do we see now, now that we need to stock take what happened 10 years and now, not from a compliance side, from a strategic side, and how do you see the profile of them 10 years from now into the future? Do you think that we are going to face more complex risks, and whether from regulatory or strategy side, are we equipped to handle them? And where do you see the risks happening, and how are we being impacted 10 years from now? And are we doing enough? Okay, I know quite a mouthful of questions here, but are we enough in the education and professional aspects to prepare ourselves for the future with such uncertainties? So again, all these questions can be summarized into the 3R. The roles that accountants play 10 years ago, now, and 10 years later, the risks that are going to happen in the future, right? What sort of risks are expected to come? Are we going to see more of COVID, and are we more prepared for that, or more complex version of that, such that it will just cripple our economy just like that? And the level of education needed to prepare ourselves for the future. So it has an element of stock taking, but it has more also on the forward-looking approach. So over to you, Novie, your thoughts on this? Either of the 3Rs, one or all the 3Rs. Yeah, thank you.
Okay, thanks, Nazri. I think, in my opinion, when we look at the 10 years ago, I think 10 years ago, it depends on which company and which level of technology that we are using, the company that we have been working with. Because if, like Pauline mentioned, if it's SMEs, right? So SMEs, maybe the system, it is not so sophisticated. If those people who have, or the accountants who have worked in the companies who are bigger, and then they can afford to use a better system, so they can see the whole flow of the process and so forth. And that was like 10 years ago. So basically, 10 years ago, we're talking about ERP, yeah, Enterprise Resource Planning System, in which that this is only to capture the data or whatever the transaction is. Whereas if we look at now, there is the emergence of a new system, which is the new analytic system, I would say. It can be a predictive system, predictive analytics, or it could be a blockchain, you know. So I think these are the things that we need to evolve from last time, the 10 years ago, to now and to future. So to cover about the roles, risks, and reskill, the roles of an accountant need to shift, yeah, rather than just capturing the data, and then must also do the, like I mentioned just now, predictive analytics, in which that they know what's going to happen. Say example, when I was working in one of the companies before, it was like almost 10 years ago, the information from the business analysts, it is still, we are using SAP system, but it is not sufficient enough, because there is not enough system to process the data. So the business analysts need to actually go down to the business units and ask why the margin is lower, margin is higher, and so forth, and come up with a report and tell why the subsidiary here is affected by the business. Is it because of the economy or because of anything else? So this information being collected via human, you know. But whereas today, with a good data analytic or predictive analytic system, all this information can be processed much faster. Maybe in the past, we have about 5 business analysts to cover for Asia Pac region, but now maybe only 1 or 2 is enough, because all this information in the ERP system will be connected with the business analytic system. So we can be able to take all the information, and all this lead to the decision making of the company. Whereas in the past, it takes time. So speed is also another factor that need to be considered, which is much faster today. So I think that is the roles of the accountants, which need to change, and then to reskill, so that we'll be more adaptive to using system rather than in the past, which is just like maybe some companies are very manually done. I think I stop there first, Nazri.
Thank you, Novie. The fact that you advocate technology to be used into the accountant's operations is basically to reduce reliance on manpower and to accelerate the key aspects of the operations, right?
Yeah.
That's why you advocate in your past experience. Efficiency through the ERP or predictive analytics kind of model. But what do you think of the cost involved in it? Pauline says that cost is not inhibitive. Do you think that the cost today would inhibit many, accountants from pursuing that, the perception that it's inhibitive and it's costly?
Yeah.
What's your take on that?
I think we need to look at what is the size of the business itself. And if we compare in the past and now, I think there are a lot more system which is more affordable. It's not really costly because we need to find out. And then say example, if you are from the SME and then you are also the big and large company. So if large company is using SAP or Oracle, for example, SMEs can't afford to do that. But there are also other systems that is actually good in the market that can be used and actually can be implied the same and used to be using the same as per what it can be done using SAP, for example. So I think it's just a matter of the mindset of accountants to move from manual to technology using system, which can actually give them a better and more accurate information for decisions.
This incidentally, thank you, Novie. This incidentally relates to a question posed by a member or the audience about encouraging small business in Malaysia. This happens to come in and I saw it. How do you encourage small business in Malaysia to apply technology in this challenging scenario and so many uncertainties? Azlin from Unit 10, and what Ms. Tan Poling said, how to encourage clients to have technological approach. How do you motivate the businesses, okay, to be more technology centric, and what can the accountants play to encourage them? What role can they play to encourage them to adopt technology? So I guess Novie sort of like answer partly, right? It's about efficiency. It's about reduce reliance on manpower. It's about reducing costs, right? So I hope you get some perspectives on that, Azlin. And since you're online, right? On the mic, and to Paul from EW, what initiatives has MICPA and MACD facilitated the transition and transformation of accountants to the new role? So it relates to the first R, which is role, right? What is MICPA and MACD? I want to say McDonald, but let's call it MACD. What does MICPA and MACD do to
MACD is fine, McDonald is fine. MACD.
So the roles of accountants, Paul and Novie at this point, 10 years ago, 10 years present, and now, and then 10 years forward. What is MICPA and MACD going to do with regards to this TNT, transition and transformation? Pauline, chip in also, yeah? Later.
Okay, let me give you a very oblique answer, right? 30 years ago, we are all encouraged to go for 3 R's, right? That time we're talking about reading, writing, arithmetic. Remember the school days? 20 years ago, nobody wanted to talk about 3 R's. But represent race, religion, and royalty. Nobody will talk about that. Now, 10 years forward, you're asking us to go for the next 3 R's, the roles, risk, and rescale is very, very pertinent, all right? Now, from the board perspective, I'm talking about the board perspective here, the corporate boards really depend very much on professionals to come up to speed to help us with all the necessary compliance, at the same time also the framework for us to make strategic decisions. We need information, not just raw data. We need information, right? So the role of the accountant has shifted towards much more focused onto your customer. By the way, who are your customers as accountants? They're all corporate people, right? Companies, organizations, they want to have assurance of the financial figures. They want to have your very an expert in terms of verifying processes, giving assurance of numbers. That is what the accountant's role is, to serve your customers who are the corporate boards. They pay the bills, all right? So what would the role of the accountants be in the next 10 years? The risk that we are facing, how do we reskill ourselves? I can give you some examples of those companies right now in the marketplace are crying for help, but we have not been able to really put a finger onto it because the accountants, somehow we are trained to be very conservative, as discussed just now. Our framework and our standard is in a way pretty definitive, it's not prescriptive. We get our standard in IFRS, in Malaysia, MFRS, right down from the IFAC. We have all the standards being given to us to comply with, right? Important that it is because we have to have some form of a comparability in our reporting. But on the other hand, we also have to look beyond our own standard from the accountant's professional point of view to the market perception of the value we give to them. Now, in 2018, there's a company called Aon. I'm sure many of you have heard of it, AON. They're a risk management company, right? They are the one who actually give you the, give company the insurance premium and all those things that they're insuring those corporations, right? In 2018, the CEO of the Aon, by the name of Greg Case, he was talking about this. The risk management industry is also falling very far behind the market development in the realm of technology, in the realm of intangibles. He's talking about that, right? Normally, when an insurance company or an insurance company, they first look into the financial balance sheet of a company, and they may extend that to actual site visit, actual sighting of the asset and so on and so forth, right? But he said, companies today, 75% of the value of those companies are in intangibles, all right? And only about 25% are tangible assets you can see in the balance sheet. Now, this is market speaking, all right? And we are serving the market. And he said this, we cannot even grasp what is the value of for example, he actually analyzed 8 different categories, 8 different groupings of intangibles and 35 individual assets, among which intellectual property, the B2B rights, they're talking about the branding, they're talking about public rights, they're talking about relationship, and so many other intangibles, all right? Which for any company to start a business, without this infrastructure, they wouldn't be successful. But those companies existed and being successful, they have this infrastructure. But where is it reflected in the reporting to the investors? None. That is the kind of scenario the marketplace is facing. Now, who are the best people to advise them? Unfortunately, we accountants are traditionally very conservative, right? Our International Accounting Standard 38 or IAS 38 states several conditions of capitalizing intangibles development. All right, there's all these conditions of capitalizing intangibles development. Most of the time you invest, it will not be reflected in the balance sheet. Take for example, none of us argue on the fact that we need to invest in human capital in this current environment, in this very competitive, fast-moving economy, right? The more we invest in human capital, where does it go? Accounting term is expense it up, right? So, but this is where it comes to the next level of our definition in the accounting profession. What is our definition of capital? What is the definition of assets? Our definition is still, sometimes I find that we are looking at the whole profession definition in the probably in the second industrial revolution, when we are already in the fourth industrial revolution. We never put asset as value. We never put human capital as value. We never put the intellectual property as value unless we fulfill the condition of IAS 38. So that kind of scenario will put us in a very difficult situation when we try to offer value to our clients, because our clients look at other, which means to say we need to reskill ourselves, all right? There is risk element, that's for sure, all right? But our role ought to be up to the level of being a business advisor to the client, understanding the client's business, and offer financial even as a foundation. But beyond financial, we need to advise the clients reporting on other areas as well.
Quick question, Paul, on this aspect, very important part you brought up. So is it a question of an accountant who does not have the technical skills to evaluate intangible assets through insufficient practice, exposure, experience, techniques, or is it a matter of they being risk averse to this? So is it a question of ability versus willingness? Which is it?
That's why I come back to the question of what are the role of accountants? Who do we serve, right? Who are the customers? We always look at who are customers or who are our users they provide services to, because they are eventually paying our bills, right? If we don't understand the market they exist in and provide our consultants, in fact, accountants are in the best position because we know the core of it, the financial part. But we have to look at the business from the lens of the fourth industrial revolution, not the second or the first industrial revolution, right? Where we're still talking about, if you go to school or go to university today, courses teaching accountants. We cannot take the value of an asset or stock we only take the value of an asset at a lower of cost and net realizable value. Is it familiar? I learned that 40 years ago. You can only value the asset as a lower of cost or net realizable value. Now, so these tangible things that we're talking about. But in today's environment, how to value assets in data? How to value assets into human capital?
Thank you, Paul. Quick question to Pauling, right? Assuming a mandate comes to you, to your firm, as an advisory firm, please value my intangible. I'll pay you X thousand ringgit, evaluate my company and evaluate my intangible assets. Would you take it up, that project, and why not?
Okay.
Based on your current set of resources and expertise and knowledge, right? Would you take up a project that involves valuing an intangible asset as what Paul's example was about, right? And why not, and how would you do it?
First, of course, I will look at my resources, whether we have the competency to do it or not. Okay, and we also look at the size of the firm. I mean, the client that is engaging us, how is the management, risk profile and all that. And then, of course, I will also take it in, provided I have discussed with my team. And we will also, if we do not have the expertise in-house, we can always talk to fellow practitioners out there who has got experience to handle this case. And we will, of course, work towards see our risk of getting the engagement and see how do we balance off, you know, the reward that we get and engage the right competent people to do it. Yeah, we will take on the job.
So you will not say no, you will say yes with a calculated risk approach, taking into account your resources and the ability of your partners. If you don't have it in-house, you try to get it from outside. But you not say no, just simply because you don't have the resources or the expertise, hypothetically.
Yeah,
right?
Of course, we will evaluate the risk involved here, you know. Of course, if the risk is manageable, we will definitely take it on. Like Paul has rightly pointed out just now, the role of accountants, we are such an important position with the client. We are the trusted advisors, right? Even the CFO in the company, how well do they understand the business that their boss, they are in, you see? Are they giving the right advice to the entrepreneurs, you know, on how do they reshape the business moving forward in a 10 years time and so on. I would say a lot of SMEs in Malaysia, we are always going for the short-term solution and not the long-term solution. We are less innovative, you know. And then, of course, strategic thinking is very important. Like just now you mentioned, a lot will just resolve for short-term planning. That's where we have to look beyond that. How do we compete with countries that are our neighbors? Otherwise, if we keep staying in our comfort zone, we will never move to the next level. So that's my take.
Very good. We have the last 10 minutes or so, and we have a flurry of questions that come in, some of which are clustered towards what MACD and MICPA can do from a context of education, in terms of their role, in terms of education that is lacking, and how to meet the gaps of the industry versus what the schools are teaching. So can we cluster some of these questions and put forth to MACD as an institution together with MICPA? What sort of measures are you doing, education programs or awareness program that you are doing to bridge the gap between industry and schools? And then what are you doing for members to make sure that they are able to deal with the challenges of the future, specifically at the institution level? Since Paul, you're the president of MACD, Novie is the CEO of MICPA, maybe you can give from an institutional point of view, what are the initiatives that you're carrying out to meet this gap? If you look at the questions that are being posed.
Okay. So I take it up first, Paul?
Yeah, go ahead. Yeah, go ahead.
All right. I think I saw some questions actually coming from Prof. Susila. So Prof. Susila is also a MICPA member. So my input from MICPA is that we are actually doing a lot of awareness by doing through the CPD program, so that the members are actually going through the continuing professional development. So in which that it is continuously being developed as a professional accountants. So that's just training for our members. And the training are actually including all the initiative that includes the technology, things that regarding the data analytics, big data topics, so that our members are actually aware about what is it all about, and then can keep up and with the trend today, so that they are prepared. Yeah. On the other side of it is our syllabus today, we actually with the MICPA CANS program that we do, the syllabus actually covers all these artificial intelligence, big data, data analytics, so that the students or graduates from MICPA actually are well prepared to face the market. To answer further, I actually have spoken to some of the universities in the past from my talk. I did mention that my advice to the universities as well, because the universities will actually come and feed the graduates to the professional institution. So at the university itself, they must do the simulation. Why I say simulation in terms of scenario in the market? Because quite a number of cases and feedback that we receive from universities, they are saying that the students or graduates are not ready, they are not market ready. Why? And that is even crucial now if we are talking about technology comes to the picture. Because in the management level, there is operational, tactical, and also strategic. If everybody is using strategy and everybody is using technology and everybody is going up to the tactical level, who's going to do the operational? So we are talking about robotics as well. So for us in Gen X, for example, like me, we are lucky enough because we actually rank and file. We have done all the bank reconciliation, we have done all the reporting, we have done the analysis. So we can actually see and understand the financial statements and the product itself, how it derives. Whereas if they're coming from the situation where everything is done by the system, everything is already reconciled. I still remember when I was working as a trainee at the Golden Hope Plantation. I tell you, the stack of the bank reconciliation and the assets of the organization is huge, you know. So, and today all these things are done by system. The bank reconciliation will be done automatically when the entering of the information of the banking details. So the students need to be prepared. So I suggested that university also need to put that scenario planning or scenario training for the students at university to understand what is it at the operational level, so that when they go out, they actually maybe in future, when the technology is already in place, people just straight away go on the tactical level. So they do need to understand what's happening on the operational level. So that is my input in terms of how MICPA actually preparing the students and also helping the members. At the same time, from the universities who are actually feeding the graduates to the professional institutions need to be well prepared as well, so that it takes two to tango. Yeah. So then it will be better. Yeah.
Thank you, Novie. Paul, what is MECD doing about filling up the gaps between industry and schools in university, if there are any?
Okay. Novie talk about being the X-Gen. He has done all the hard, heavy lifting. I can talk about from the perspective of the baby boomers. So we are already over the hill.
Most welcome.
We have Gen X and baby boomers.
Yes.
Yeah, exactly. We find that all
There's
these
3 generations.
detail. Exactly. We talk about all this skill set that you have as an X-Gen. It is very, very complex for us and very, very, I would say, detailed and sometimes, I would say, frightening to see all the details that we have to look into. We'd rather put all these things to the technology, let the technology turn out everything else, right? But as we move along in technology, I can tell you that even the study today shows that more and more critical importance is placed into the human relationship. Even the World Economic Forum has already listed out what are the skill set that we need from 2020 and beyond. And much of it is talk about human related. For example, creativity, people's management, coordinating with others, emotional intelligence, judgment and decision. Now, all these are very human skill set, And I think that perhaps that would give the lifespan, increase the lifespan of baby boomers in those areas where we don't have to do the actual details, but more people relationship, okay? In fact, I would put it this way. This COVID-19 actually changed the whole world already, as you realize, all right? And every one of us in every generation has really got a role to play. And because we are social distancing ourselves and we engage in technology now, as much as for the baby boomers as seniors who are afraid sometimes at a little bit reservation of using technology, they are pushed into that environment to use that. Today, I can tell you, a lot of people find Zoom is very simple to use. It's not so difficult. So in time to come, you can imagine technology will evolve in such a way that become more humane, all right? They're not human, but more humane interaction with human being. I got a very interesting book in front of me about it, author September last year. He wrote a book called Human and Machine. How that eventually all this technology, especially the advent of artificial intelligence, will invade into our workspace, all right? So as more senior people, we ought to understand what technology is and to place in the right place, and we can make full use of it to help us to move forward. Coming on the education side, okay? As I mentioned just now, that our definition in our accounting profession, we are still very, very conservative in our approach. But a lot of things have changed and impacted into our profession. And if our universities or education centers still teaching the students on those areas, which is good as historical information, but moving forward, what do they need to do? Right? Eventually, just now, I think Pauline was talking about engaging cloud accounting and all these things, which is already in place, all right? In fact, probably 12, 13 years ago, I used to conduct this session for MIA, for the PPP. There's a public practice program, right? I talk about all this area. People still don't know what I'm talking about when I talk about cloud accounting. But today is the in thing. Can you imagine that today, if our clients is already gone into the cloud, and we accountants are very familiar, with cloud accounting, despite the lockdown, we can do our work anywhere. Now you want to do your work as accountants, you may be equipped with it. Your clients are not equipped with it. They are not coming to work. How can you do your work? But all these things, in a way, push the clients up to the technology platform. It helps everybody. Now, this is where I think accountants will also develop their communication skills. All right, accountants are not known to be very good communicators. We are good to be implementers. Sometimes I view ourselves, we are good to wave the big stick. If you don't do this, you get penalized, you go to jail, and the clients are frightened enough to come to you, right? But on the other hand, if we are good communicators, if you do this, this is a carrot. We can help you to do this, we can help you to do that. We don't have to see you, online I can tell you where your company financial position is and what action you need to take. So all these things, eventually you have to push your clients up to that level. If you compare what the banks are doing, in today's environment, 10 years ago, a lot of people were afraid to go into internet banking. Today, I don't go to bank. Everything is done through internet. Oh, there's a risk and an element like that. Yes, there are risks. In every business, there are risks. Now today, they push toward the fact that, the counter service is reduced. Everybody at least go to the ATM. I know some old aunties and all this may not want to go. But generally, this is the direction it's moving. And I see the accounting profession, we ought to move up the value chain for our clients. You have to tell them the value. And if they can do that, it saves us tremendous amount of time and energy and cost. We're traveling up and down to do the audit work.
Yeah. Thank you, Paul. Right. To sum up what he says, there are certainly gaps that exist in industry that universities have not covered, particularly pertaining to communication, value creation, amongst others, right? Having said that, we are pleased to share also that and MyFinB are working together to come out with 4-track episodes also, of which one of which is actually value creation for the accounting sector. So there will be a program that talks about how to bring auditors, accountants, and board of directors together on how to create value for the board and for the stakeholders essentially. We will keep you posted on that, yeah? So we have the last 5 minutes remaining, and which most of it have been answered in the part 1 and part 2. Can I see the next slide? So the idea is all said and done. We've talked about the 3 R's. We've talked about the forward-looking calculated risk approach on how to see things, for accountants. But the idea is, at the end of the day, how do we monetize this data? So data, as you know, for accountants, they are faced with structured and unstructured data. How do we monetize this, and what are the medium, short-term, long-term ways that data can be augmented and create value or even money for the owners of the business or even the organizations. Perhaps Novie, wearing, let's say, a private sector hat that you carried before in corporate world, how do you tell accountants how they can optimize their structured and unstructured data? Structured means all the spreadsheets, all the bank statements, the ledgers, right? The templates. Unstructured data will be all the text information, the news, the reports, and etc. How do you create value in this regard? Novie, over to you.
I think somehow rather I've mentioned earlier about my experience when I was talking about the business analyst, right? So I think that is a good example because the structured data is there and I think one of the questions from Shantan, she asked me about ERP. Yes, everybody knows. Yeah, that is quite structured data because it's already there. It is in the GL, it is in the AP module, in the AR module, and so forth. But the unstructured is the most challenging portion for accountants. Because in the past, if we have not been using a good tools for processing the unstructured data, accountants will have headache. It will be, losing hair like me, to actually trying to find information, trying to make it in the report, because because it's a business information. It is not financial information. Because accountants are trained to do more on the financial information. So that's why business analyst job is actually the one that processing the unstructured data. Those information that comes from the market, that's coming from the ground, coming from the stakeholders. So these are the things that, in my opinion, I believe that today, with the good data analytic tools, it will actually help us a lot for the accountants or for CFOs to actually make decision. Yeah, because with the that kind of information, it will help and is a complement to complement the structured data, and that's where we can monetize because we can make the right decision, maybe for investment, maybe about diversifying for another business, maybe about shutting down certain entity because it's not profitable anymore. So I mean, these are the things that it need to be together, structured and unstructured data. The only challenge I mentioned is that unstructured data that we have today, we need to find the tool to do it, to make fast and speed decision. Yeah, that's
Paul, value creation reporting or integrated reporting uses a lot of unstructured data or text information, right?
Yes.
Could you sum up in 1 minute, for example, how can accountants deploy the technology that Novie was mentioning about and then produce a report, and how does it create value on the accountant's part? I know it sort of tie back to the second part as what Novie said, but can you maybe reiterate and recap in under 1 minute so that I can pass over to polling how the structured, unstructured data can be of value to the accountants and communicating to the board or monetizing?
Okay, all right. I think the concept or the thinking of accountants has to be aligned to the changing market, as I said, And coming back to the evaluation by the World Economic Forum, they're talking about a 10 top emerging profession coming up in 2022, 2 years down the line. Is that 7 out of 10 or 8 out of 10 are actually IT related. And they're talking about the top declining profession by the year 2022. Among them are data entry clerks, accounting, bookkeeping, accountants, and auditors. So what does it mean to us? Now, whether you want to argue on the time frame is another thing, but the point is that the trend is moving in that direction, meaning the accountants ought to equip ourselves with data, with these technology skills, all right? Now, we don't need to be technologists, but we need to embrace it. We need to understand it. We need to use it as a tool and coming up with all this information, both structured and unstructured, to help us make much, much more better educated decision. In fact, accountants ought, in fact, I don't know whether you've seen this book or not. Let me show you this book. Have you seen it? Chief Value Officer. It's written by Professor Mervyn King. By the way, Mervyn King is actually serving on our advisory board in MSCD. He has given you a lot of input on what is happening around the marketplace. And accountants' role has expanded to such an extent it's no longer just financial. In fact, his argument was that the term Chief Financial Officer is in a way outdated because the role of CFO has expanded so much to create value for the company. And therefore, we ought to call accountants as Chief Value Officer moving forward. If we had coined ourselves that way, all right, every company looking at us is no longer looking at finance, but you have a responsibility much, much, much more holistic that covers both structured data that we're doing very good at and unstructured data that impact onto the company. And that is where it filters down to simplifying the reporting framework instead of just financial. The integrated reporting covers and redefine what are capitals. They define the 6 capitals, and what are the 6 capitals? Even though financial term, we cannot capture the value of the capital, but in reporting terms, we need to highlight to our clients, the user of the information, the value, for example, my investment in human capital, my investment in intellectual capital, my investment in social capital. Now, all these things are value to the client, but not reflected in a standard accounting format. But that doesn't mean that we totally ignore it. That's why I said if the accountant to elevate our coverage of the expertise we have to cover all those areas, we will be quite indispensable. But technology is a platform. Technology is an enabling tool. We need to engage, otherwise it's too voluminous. As you realize today, accountants are not just financial, but you have to now encounter what ESG, the economic, the partners and social and governance aspect of your reporting. Sustainable reporting is one of those issues, okay? And moving forward, the United Nations have come up with the 17th Social Development Goal. We need to account for it too, okay? So if we align to the thinking globally, accountants are always in demand, but more than just financial. So think about it in future education, okay? And technology is very important. So artificial intelligence and all those things are very important tools for us to simplify our work.
Okay, thank you, Paul. We have reached the tail end of the discussion, and there are still questions streaming in. Very encouraged by the excitement, enthusiasm, at times anxiety, from the members of the floor. Let me just put through one more round of questions with regards to the barriers of accountant transformation, and I hope each panel member can give 1 minute ish perspectives on that. So far, based on the Q&A portion, I've seen, I've classified the barriers to all this transformation in 5 areas. Number 1 is the boss mindset, right? What if the accountant is willing to change, able to change, but the boss is not willing, not able, very old-fashioned, old school, right? The first one. Second one is risk aversion. Bringing back our earlier discussion, how do we overcome the risk mindset? Of taking on a futuristic perspective or forward-looking perspective. So one is the boss mindset. Second is the risk aversion. Third is the cost of acquiring technology. This is just a means to recap what Pauline has mentioned just now. How do we address the perceived barriers to adoption through cost? Fourth is the data, how to deal with unstructured data, which Novie was saying is a bit more complicated because we are taught how to deal with numbers, but how do we deal with text? And that ties back to what Paul said about communication abilities of accountants, yeah? So fourth is data. Fifth is the lack of relevant education programs. I know there are a lot of online webinars and all that, but there's a lack of technical education program as feedback by some members here, to prepare accountants to deal with these challenges. So quite a few questions that came from the Zoom group chat. Maybe if you can take a few of these barriers and sum it up, that'd be great. Anyone to come in? Pauline, maybe you start off first.
Yeah, I think we accountants, like Paul rightly pointed out, we are the chief value officer rather than CFO. Because we accountants are sitting on a gold mine. We have all this structured and unstructured data. Why not put our skill set on how do we turn and monetize this value to benefit our clients, our boss, and so on, rather than just working in the number and not seeing beyond the numbers. So that's my take for the day.
Paul?
Yeah, Pauline, I fully agree with you that we accountants are really sitting at the gold mine. If the value of data is so astronomically high that we don't even know how to grasp it, we are losing out tremendously. Right? To give you an example here, as I always give the example in the case of WhatsApp, we're using WhatsApp, right? In 2014, when they taken over by Facebook, WhatsApp at the time making accumulated loss was 232 million. You know how much Facebook paid for it? It ranges some different reporting from 19 to 22 billion US dollars. What do WhatsApp see? Facebook see is actually the data. At that time, WhatsApp has something like 300 million exchanges every day of data around the world. Today, you know how many exchanges every day? 65 billion. If they have the, in fact, fixed as algorithm, machine learning, the AI, all these tools, all right, to know how to harvest it, such a valuable thing. Accountants are sitting on a tremendous value of the data of the client. If you accumulated all the clients, all right, you will know how much data that you have. But how do you mine it? Is a big issue. But come back to the other value side. We talk about just now how the accountant can create value for a client. As I mentioned, that we have to report a much broader perspective rather than just financial. I don't know whether I've seen this book, which I find it came in 2016, The End of Accounting. I hope I don't frighten all the accountants. Now, this research was done by two professors stating the fact that we accountants are very good in all this assurance and so on and so forth. And our target of all our financial report is to who? Is to the investors eventually. They are the one to put money in a company. They want to know what is the company's performance. And we get a financial report along the framework of the regulators given to us and our accounting standards given to us. But what they found is that investors look at this sort of financial report. Number one, it's already outdated by the time it comes out. 3 to 6 months late. Investment is moving so fast, all right? Number two, it covers only financial, all right? There's a lot of areas that the investor look for that we don't have. For example, market intelligence, product analysis. They talk about all these filings and so on and so forth. All this information, those are unaudited information, but it's important for them to make investment decisions. So we have to reevaluate what role are we playing, who is the marketplace, how are you going to add value to them. We must continue to explore this frontier, all right? So to do it manually is very tough. That's why we should very much focus on raising ourselves up to the technology platform, whether it's going to be blockchain, whether it's going to be a big data analytics, whether it's going to be artificial intelligence. We have to embrace that. That's how the profession will continue to maintain its status and maintain its relevance in the marketplace. And we are quite unbeatable if we can achieve that to be market relevant. Right.
Thank you, Paul. How about Novie giving us a final take on this, barriers and solutions?
Yeah, I think I go back to the topic that we are talking today. It's from beans to gold. I think why it beans, because people talk about accountants as bean counter, right? Beans counter. So I think we need to move up the level to gold, because as mentioned by my fellow panelists, Paul Ling and Paul Chan rightly said that, yes, the value that we are creating. When I was a CFO for APAC, for Getronics, it was actually, my CEO said, the chief sales officer is taking care of sales, chief operating officer is taking care of the business operations, and the rest of the work is for the CFO. So it went to me. And what was that? Business strategy, IT, HR, admin, all sort of things, the rest of the world. So we are the one who actually make the value of the organization, because we create value to each of the departments and so forth in terms of organization, because we need to look more than just the business. Of course, we are also the advisor to the CEO in terms of the financial direction. We also put a stop to the unnecessary investment. So I think this is a very key. And but to answer on the Paul side on about the book just now, the end of the accounting, I don't think so. Accounting is still needed, because we still need the basic. We need our house to be kept clean. So then only the investors will come in and ensure that everything, the right decision be made. I think it's the right balance. Go back to the first slide that Nazri showed us just now, between compliance and strategy. We need to have both, but we need to strike the balance between the both, and then we can become a better person to give value to the organization. I think that is my input, my take, and thank you. Yeah.
Thank you, Novie. Thank you, Pauling, and thank you, Paul. So is data the new gold? Data is a commodity like gold, right? And quality is definitely important like gold. It needs refining to get the most out of it, just like gold. But data isn't valuable, it is everywhere. So based on what the panelists have shared, right, the value of data is the insight that it can create, and not just historical and present, but into the future. So the smart use of good quality data are very powerful, structured and unstructured. So brands and companies that want to develop actionable insights through the use of data will be winners of it, especially for accounting firms. So we hope that from this panel, it's not the end of this from this webinar, it's not the end of the discussion. We'll continue to engage you with topics like this. So by next Thursday, we'll be organizing a talk called the value creation. for perspective of accountants, value creators. Can I have a look at the poster, please? So for those of you who wants to join, we will feel free to join. And the date is as such. The speakers are being gathered from MICPA side. But it's basically the next step is about how to develop a set of strategies to transform a CFO to a CVO. The topic that is Paul's pet topic, yeah. So again, this is to go into actionable steps on how to make it viable and make it practical for accountants in terms of strategies to adopt for their firms and for their bosses, so to speak. Okay, so thank you very much, and thanks once again to all the panelists for their superb sharing. Unfortunately, time is so limited in a 1 hour plus session. So we hope to continue with this advocacy work, yeah? And we'll keep you posted on this. Thank you very much and have a good day.
Thank you. Thank you, everyone.
Thank you. Thank you, everybody.
Thank you, everybody.